Hi guys, it's Cole from the Two Traders. I hope you've all had a good trading week and done lots of learning. Especially we've been pushing our course out there for free as well, so there's a lot to take advantage of there, especially in the times of isolation. So get down onto that course and have a little look. I hope you're all staying safe as well and sticking to the rules and staying in. So let's stop the spread of this virus. Okay, so all I'm going to do this evening, I'm just going to run you through 2 or 3 trades that I've had this week in the market. It may not sound like a lot, but I don't trade. On average, I have 3, maybe 4 trades a week. I'm not one of these people that feels like they need to be in the market all the time. I try and only be in the market when I can make money. Okay, so we're going to head straight in and have a little look at a couple of the trades that I've taken. We're going to go... First of all, let's go in with, I think it was Euro. We've got Euro pound and US dollar yen. Let's pull out US dollar yen. See if we can find that. There we go. Let's move this one to the top. Okay, so first of all, US dollar yen. This trade was on the 1st. I spoke about it in the Telegram group actually on the 30th but I think it was about midnight actually that I put this out there that this market was ready to drop. So let's go back out actually onto the daily just so I can show you. We've bounced off of this. Well, we've not actually touched it, but we've come down from this supply area quite strongly as well. You can see there's a point where we're left with wicks and price doesn't rise up above. If you zoom in there, you can see there that price actually doesn't go above, and we've got the wicks area. So it's actually created a new supply area as well. So that's the first signal. We've got the moving average crossover as well. Okay. So let's head down then straight to the 4-hourly chart. Now, one thing that stood out for me here was, first of all, we'd come through this level here. Okay, but also we've got that pattern again where we've got this area where price hasn't risen from. Then we've also got the moving average crossover. Okay, so these are good signs that the market is ready to. Well, this market was ready to drop. We've also got a vague breakout of this consolidation area here. So it's another thing that we can add to the equation as such, and also an increase in volume. So anyway, this was a good sign here that the market was ready to head down. Now we're gonna then I move down to the hourly chart. Okay, so there you've got it clear there. You've got those wicks on the hourly, and we've come back up, tested, and moved down. Now you'll notice here that we've not made a high. If this had taken out this level here, then there's a potential that I wouldn't have actually picked this move up. Okay, it's only because we'd come up and actually made a lower, just about a lower high. Okay, pretty much dead even actually. That's absolutely fine. So as long as it doesn't break that level and make that, then it doesn't take that one out. Okay, I'm just trying to find the time that I spoke about this. So I think actually when we pick this trade up and everything's actually in place, it was more so around this time here. So we'd already made this move, which is fine, and we made then a lower high down here. Okay, and there you see again, you've got that 3-wick pattern. You've also got that OBV breakout up here again, which is nice to see. You've got this 3-wick pattern. Now So when I started talking about this trade pushing lower, it was here. As soon as this come up and touched this level here, I thought that was a good entry place. Now I didn't get in this trade at this time of night. If you're in the Telegram group, you'd have seen why I didn't get in this trade, and it was simply because the risk to reward wasn't good enough to come to this low. So I think it was at this level here, around 107.660. So around that level there that I picked this up to push lower. Now a lot of you are probably thinking, well, why didn't you get in here? This is confirmation adding to this move as well. At this point, the daily moving averages probably hadn't crossed as well. So that's a big reason as well that I didn't get in here. So anyway, we're looking at this, and this is a reasonable move. This can be a reasonable move anyway. So, for instance, so if I was looking to enter this at that time of night, like I said in the Telegram group, you're going to want your stop loss to be in this wick area here where price doesn't want to come to, and really above it. Okay, just give it a little bit of breathing space. Right, okay, so you can see there that the risk to reward to come down to this level isn't good enough. It's 0.62. So I said to the guys in the chat, look, I'm not going to take this move. I'm going to wait till the morning and jump in it and get a better entry. Okay, so it was, I think I got up, I think it was at 8 o'clock I got up on that day. And then the place I actually got into this trade, so if we pull this along as well, because you can clearly see throughout that night, it popped into here and it acted as a resistance level. Okay, and it didn't want to break back up into that area. So where I got in was at the 9 o'clock candle where it touched into that zone. Stop loss here, and I aimed for this level here. Yeah. So this was the target area, and as you can see, so this over here, if I'd taken the trade over here, my risk to reward was 0.61. Now look what suddenly happened is my risk to reward is 2.51. So that is a perfect trade to take. You could have even got in a bit lower and still had decent risk to reward. I got in on the touch up here, which was perfect. I shared this as well on Instagram, and it moved on down. So I think I closed out some of my trade here, and then it carried on down, and I took a bit. I finished off around, I think it was 3-1 risk to reward on this trade. So that was a nice trade in the terms that you had that perfect supply area that price was rejecting from. You had the confirmation on the 4 hourly that, let's pull that 4 hourly up. So you had that 4 hourly, those wicks, that area where price didn't want to go into and push down. So it was a good sign that price was going to push lower. Now actually where you can see is it's actually come back into there again. So looking forward to next week, if we don't take out this level and actually come out to this side, then we could look for shorts again in this market. The moving averages are still bearish as well. However, if we do take that level out, then we look to come down, retest this area, which will make a higher low and a higher high, and then we would potentially start looking for longs depending on the moving average. Okay, but on this one, we was getting lower highs on the 4 hourly, which was perfect, and we've also had lower lows as well. So that was a nice little setup to take. Now let's move on and have a look at Euro Pound, because this market played out quite nicely. Spoke about this on Instagram on Sunday evening, live with Dave and Patrick. So you can see here that the market's hit that it's probably a supply area. If I come over here, so this area here and this area here. So there you go. You've got that resistance area. You see this candle here. This is a stop loss taker. let me explain this to you actually first. So this candle here, as we go through, we take the stop losses, then we've got exhaustion where buyers jump in, and then all the buyers have run out, okay, and then that's when the market reverses. So we've got that nice smooth moving average crossover again, perfect. Now we got in this trade on the 1st as well, so on this candle here. So I'm going to run straight down into the 4 hourly and just see how that looks. Now, what you've probably already noticed if you've been following me is we've got perfect lower highs. Yeah, you've got 1, 2, 3, potentially 4, 5, 6, 7, 8, 9. Okay, and you've also got the lower lows. Yeah, so we'll take it from this one. Okay, on the 27th. So you got. Or you could go from here, 1, 2, 3, 4, 5, 6, 7 lower lows. Now it does look like that trend's starting to bend. So we'll come to that in a minute and have a little look at that. So at 4 hourly was looking good. So we are looking at the 31st, and we got in on the 1st. So let's go through the 31st and see what happened. Okay, so we got in on the 1st. I can't remember the exact time. But you can see there we've made that lower low and a lower high. So I'm going to head down then onto the 1 hour chart. And again, you're getting that perfect. This is for a new trader. I would advise looking for this kind of pattern. It is the simplest one to trade. Now, I wouldn't recommend. I'm not a fan of trend lines. So you can see why I'm not a fan of trend lines. It's more about the price action. Trend line can be hard to put on to get it to hit your points, and if you'd have started off with these two, so you'd have had that there, and then this price didn't quite touch it, so you might not have caught the trade. Then you've got here, and then this one didn't catch it. So you're far better off actually looking at levels that it's coming to. So if I can kind of give you some insight here. Okay, so you can see here, you're better off working from these kind of levels. So when it comes back up, it's touching this level. Touching this level, touching this level, yeah. This is going to be more effective than actually using a trend line. But you can also use it as it breaks back under price action with volume as well. Okay, so anyway, where were we? Let's have a look. So we were looking at, I'll leave them on there for now. So the 31st was the day that I would have been looking at. Yep, so the 31st, we've come down, made that lower low, perfect. Nice bit of volume as well. So when I started to look at this trade was actually the 1st of April. Now, I think I got in here about 9 o'clock. You can quite clearly see why. We've come up, tested a level. We've steered clear of this area. We've also got decent volume. Yeah, it's okay-ish. I wouldn't say it's the best. You can see it's not the best of volume, but it's not the. You can see how the market actually, with low volume, it's not working very well, that is it? Okay, it's not letting me do it perfect. Okay, so you can see with the low volume what happens to price. It's going back up. So this is a false move, and there's not a lot behind that. Okay, so you can always look out for that, and you kind of know as soon as volume pushes in and the candle pushes down, you've got confirmation, one lot of confirmation there that the price is ready to push down. So this was pretty simple, really. It was just about fitting that risk to reward. So if I got in on this candle here, go with your stop loss there. Initially, you're going to be looking. You're going to be looking at the so 1.24 risk to reward, and then pushing further down 1.82 risk to reward. So you could have pulled out here or let it run. It's come back up, touched off this area, and then it's run down even lower. What I tend to do is close out the trade when I'm happy. So I think I got 1.5 risk to reward on this one off the top of my head. Close out the trade when you're happy, and then on the second I re-entered. So again, this one was, let's have a look at the second. So that would have been on the pickup of volume, okay, and then enter a short position on the break. There we go. Let's pull that into the 30-minute actually, because that's where I trade off. That's where I pick the positions. There we go. So that would have been my entry point here, and my stop loss would have been just about here, just above this area of consolidation. Okay, I wouldn't have gone with a stop loss that wide. There's no need for that. If this did stop me out, then so be it. But to be honest, the trend was so nice, it was very unlikely to just stop me out. Okay, so your first look would have been at a 2.42 risk to reward, this low. You'd see how it reacted. Now you can see that candle's come down. This is quite important, and it stopped at it rather than rejected it straight away. So you can give it time and see what happens. Now I actually got out this trade in the area of consolidation. It consolidated for a little while, and I thought I'm going to call that a day. So yep, I pulled that out. I could have held on, but who's to say then if I held on that I wouldn't have ended up getting pulling it out here anyway when price rise back up sharply. So to be honest, you're never going to catch a trade from there to there. Albeit that looks lovely, 7.66. It's just not going to happen. Okay, so just be realistic. Pick your entries. So your entries probably going to be around, like I say, this level here. Your stop loss above. You could have it above this area of consolidation. You could pull your chart out. You can have a little look elsewhere. You can go above that area. As long as you're fitting risk to reward 1.44, that's absolutely fine. Okay. So there's a couple of trades I had. So that was the one on the second. Showed you one on the first. Now I'll reassess over the weekend what I'm looking at next week. Chances are it's going to be similar. Now I know that I went through markets on Instagram. I said I'm looking for pound to rise up, which is fine. It just didn't play out right, and I haven't really traded it. I think I did have one losing trade on it this week, but it wasn't a massive deal. I lost probably a little bit of money. I think I might have traded that on the Monday, so after this 27th, yeah, possibly on the 30th I traded that. But yeah, it's not played out, so you leave it alone. As soon as it starts, you probably notice if I go in here, you're probably going to be getting an area of consolidation. There you go. Possibly lower highs as well. So when a market does this, I'm not that interested. You can see the ones that I've just shown you have nice movement. Okay, and this one also had nice movement. Not as clear as this one, but you can see it was still making movement. Yeah, and now once it's settled at that bottom level there, then there's not much interest in it. Now we've seen that rise today. We've seen that rise over the last few days, and we've just hit into that area. Okay, so that'd be interesting to see what happens next week, especially after we had NFP today, which should weaken the dollar. But my instinct on that, we did make a little bit of money. I'm not going to share them trades now because there's not so much technical side to trading off the NFP, but I have a feeling that everything was priced into these markets as well. So that's why we didn't see huge reactions. Okay, so that's not a great reaction to NFP. Okay, so potentially priced in. I think we might see that roll over as well, and head down so you can see it hitting off this level here. So we could potentially see that roll over and head further down over the next week or two. But I'm going to go through, I'll do a live Instagram on Sunday with Dave and Patrick, and we'll run through the charts. Now, all I say is, just because we're running through them charts, don't run and put a trade on, because each trade that we enter with precise rules. Okay, so if something doesn't play out, we do not enter the market. So we could look at 6 charts, 3 of them might not play out, and we probably didn't have a trade on them, or we might have one losing trade on them. The other 3 might play out perfectly, and they're the ones that we'll be trading. So you've just got to keep that in mind. No one's got a crystal ball. No one knows exactly where the market's going to go. We've just got to use our edge when it comes to entering and exiting the trades. Okay. Right, guys, I hope that's been a good video. If you could like and share it, that would be great. If you want to join the community, just drop me an email, carl@thetwotraders.com. Yeah, thanks a lot. Have a good weekend.